Hello and welcome, everyone. First and foremost, may I give my thoughts and prayers out to the victims and the families of those from September 9/11. At least we never forget. And I know every American, especially myself, we know exactly where we were that fateful morning. Myself, I was at the Chicago Board of Trade standing shoulder to shoulder with a man by the name of Jeff Fox, who founded a company called Fox Investment, which some of you older traders may remember, Heinold Commodities, right? But man, it's a very tough day, and this particular market in this week, as we came into yesterday with the the Jewish holiday New Year's, Rosh Hashanah, we noticed yesterday lots of traders absent, taking advantage of that holiday. Number one, number two, we came into the markets today with a lot of people having respect and standing back from the market. We opened up with a market lower, but in the trading room, gang, I kept saying I'm not one. It's not important how the market opens; it's how the market closes, and we got to wait for a setup. And we had a couple things that had happened. We started talking about the upside in crude oil with the volume, and here in front of us are three of my trades and the models for the market today. One, again, look at crude oil starting off with the volume, the person volume indicator here. It fired off a long position on a 5-minute. This is just a 5-minute system. The darn thing got out of, if you notice, I do this a lot. I'll let you know, orange is the entry, red is the stop, profit target. It got in and out of the trade on a half position. It got out a half, and it's still in the balance, or it's only still currently long one contract. Very nice trade setup. Next, which was what I was more interested today, was while we had a little trade this morning as we were doing our pre-market session, I was telling folks, gang, this is probably not the day to be selling unless we had a breakdown in the advanced decline. And quite frankly, we didn't get that. And I'll go through that in just a minute. But what I wanted to point out was the trade that we did ring true in the market, and that was we were looking for this last conditional change, that gray line in the sand. We got to close over that, and this is what I told you guys in the trading room today. High close doji greater than the daily pivot, closed above a swing high, and we had a target up near what, that 85.5, 86 number, and bingo, it scaled out of half the position. That's the blue line. It trailed out the balance of the position, and now it's flat. So in the live trading room, I actually had your stop right under the 89 and a quarter number, and the system actually, as time passed by, generated a new trailing stop function, and as you can see, it did activate. So we're flat the trade now. Just right now, you can see it's just gone in a new long position in the market on a breakout trade, and as you will see in just a moment, it'll lay out because it's a brand new trade right here. It did not, the bar has to close, and then we'll see the stop. My imagination says that 89 and a quarter will be the stop on that trade, and then profit target first is probably going to be 29 and a half. Volume still looks good, so that's a pretty cool trade actually. While we sit here, meanwhile, let's go over to gold, if I may. Gold has been a kind of a ninny market. And why is gold a ninny market? Ninny because it's in a seasonally strong period of time, and it does nothing but go down. And here we are. A week ago, we were close to 1220, and now we're back down to 1190. So if this is our seasonally strong period of time for gold, I can't wait to see what happens in a seasonally weak period of time. The good news is the system does catch a lot of these trades. So shorts, it covers. Shorts, it gets out of the trade, as you can see, and I'll change the color. Blue is a profit target. It gets out, and then it trails the stop. And here's what's interesting on this Algo optimizer product. The gold trade here, it's in a short. This is what a lot of traders fail to do. They're in a position, they get stopped out with a trailing stop, and they don't reverse to the upside, right? So if you were short, would you have reversed to the upside? Most professional traders do. But here's the thing, even if you weren't short the market or you were looking for an upside buy signal, we got that by what? A close greater than these old highs, Here's your buy signal right there. It gets long. It does what it's supposed to do. It enters into 2 contracts, right? That's our normal algorithm position sizing. Look at the volume indicator. It shows that while the market is just consolidating, it's showing that there is strength in the momentum of the volume. This again is the volume indicator, right? This is a momentum indicator, a proprietary histogram person momentum indicator. So as price is going down and down and down, the momentum is getting more positive and then fires off a histogram buy setup. So the system is designed to get you in, and you can identify, do you like the conditions? And when I say what are the conditions, is the market recovering on stronger volume? Yes. Is the momentum of price improving? Yes. Is the risk within reason? Yes. And then what does it do? It gets out of the trade at the intended profit target, and then what did it do? It trailed out on the balance of the position. So this is now flat. This is just, unfortunately, it's gold. And gold's not in a $20, $30 trading range environment. This is not the greatest trade in the world, financially speaking, but it is a perfect trade because it did exactly what it was designed to do. Get in at the right time, trail the stop, have a profit target, and with a defined risk. That's a trading plan, and that's what the Person Algo Optimizer is designed to do. Lay out our trading plans and execute based on those plans. So I think at this point in time, let's go back to the market price. We got in a position here, and what did it do? It said, nope, it's not going to work. Get out. And that's part of trading. Now, I would have to tell you, quite frankly, while we have profits, open trade profits here, and that will trail out or max out, we also have a situation that we're probably, as we get through this, 1 o'clock time period, 1:30, maybe we consolidate, chop back and forth, etc., etc. Unless we really see a dynamic change, we're going to turn off the Algo Optimizer and not really take any more trades. The volume here is showing a little bit of divergence pattern, meaning that we're seeing lower highs in the volume analysis, which means that this area, we're probably going to see some consolidation as we head into the afternoon. So, that's the market wrap up. I just wanted to share with you guys exactly when I gave you the trade this morning in the live trading room. I said, hey, the optimizer, we are now long the market, and we have like literally an 8-tick stop. And it was just literally one of the best setups. It's a signature John Person trade, which is if the market goes, if the market is supposed to be bullish, it will do what? It'll chop around, and then if for whatever reason you don't like the market at pivot support, which was 28.72, if it's not a time of day that you're comfortable with trading, if there's mitigating fundamental situation like a remembrance day of solemn, really serious 9/11 memorial services, then wait until traders get back into the market and wait for higher probability trades. What's a higher probability trade? A close greater than the pivot and on improved volume readings, and therefore you're going to make some money. That's the gist of using the Algo Optimizer in its best sense of the word. I thank you for watching, and I just wanted to make sure that everyone was well aware of that was the trade setup that we were talking about in the room today. Thanks, everyone.